Hello students, in this session we will be covering a small topic, that is when the bill is sent to bank for collection. Now in the first method or first use of bills, we saw that the bank can be in the second use, we saw that we can send to the bank that bill and we can take a discount whenever there is emergency of money. Now this one is little bit different. In this case also we will be sending bill to the bank for collection, but we will not take discount. Now let us see what is meant by this. Bill is sent to the bank for collection. Sometimes instead of discounting the bill, it is sent to the bank with the instructions to keep the bill till maturity and collect its amount from the acceptor on that date. Now in discounting we saw that we will not wait for maturity date and we will withdraw or we will take money from the bank as soon as possible. But in this case what we will do is that instead of discounting it, we will send it to the bank and along with the bill we will give them instruction to keep that bill till the maturity date. Suppose now it's January. If the maturity date is in the month of September, then I will give instruction to my bank to collect it in the month of September on a particular date on which the bill will become due. So bank, what they will do is that they will wait till September to collect the money, and after collecting the money from the payer or acceptor, then they will give it to us in our bank account on that date. So in such a case, bank will not credit the customer's account, means they will not credit our account until and unless they don't receive that money from the acceptor. Now what are the accounting treatment for this kind of transactions? Now when the bills are sent for collection, that means suppose I received an acceptance from Mr. X and today itself I sent that bill to the bank for collecting that money on maturity date. So today itself the bank will not credit my account. They will open a new account. The sender of the bills opens a new account in its book named Bills Sent for Collection. Now today I am sending that bill to the bank for collection. Then today I will make a journal entry or I will make entry in my books and I will open a new account, and that account's name will be Bills Sent for Collection account. This is a personal account, so we will apply personal accounts rule, that is debit the receiver, credit the giver. So this account will be debited when the bills are sent for collection. Now today I'm sending my bill to the bank for collection, so I will debit this account, and the day on which I will actually receive that amount in my bank account, that day I will credit this bills sent for collection account. Now these two are the journal entries that we will be passing in our books. See, bills sent for collection account debit to bill receivable account. When I sent my bill to the bank for collection, this journal entry will be passed in my books. Then on the date or on the due date when I receive actual money from bank, that time I will make a journal entry, bank account debit to bills sent for collection account. Now let us see this with the help of an example. Now illustration number 8. On 1st October 2018, X sells goods to Y for rupees 20,000. Now there is a transaction mentioned for selling goods also, so we have to pass journal entry for that. So let us see the transaction. Now in this case we know that only Mr. X and Mr. Y is there, so it's clearly mentioned that we have to prepare journal entries for two persons. So first let us see in the books of X how the journal entries will be done. Now first is the sales transaction. So what we will pass is that on October 1st, Y debit to sales account, normal sales entry, normal credit sales entry, worth rupees 20,000. Similar manner in the book of Y also we will write October 1st purchases account debit to X rupees 20,000. Now let us read the question further. On that date, that means on 1st October itself, Y accepted a bill drawn upon him by X at 2 months for 20,000. That means he accepted the bill and then he sent it back to Mr. X. So when the acceptance is sent back to the seller, again transaction will be there. So on October 1st, bill receivable account debit to Y, because bill receivable, X is the receiver of bill receivable. Okay, so bill receivable account will be debited and Y is the giver, so Y's account will be credited for rupees 20,000. The similar manner in book of Y also there will be journal entry. X is the receiver of that acceptance, and for Mr. Y that bill will be bills payable, so it is going out from the business, so it is credited, okay, with rupees 20,000. Now next, let us see. X retains the bill till due date and on due date sends the bill to the banker for collection. Means for 2 months, let us count the due date. Okay, 1st October, let's see 2 months from 1st October will be 1st November, 1st December, plus 3 days of grace, that is 2nd December, 3rd December, 4th December. So we have due date on December 4th. Okay, they said that X retained that bill till December 4, and on that day he sent that bill to the bank for collection. Okay, in due course X receives the information from the bank that the bill has been duly met. Okay, now after sending that bill to the bank, he received an information from bank that Mr. Y paid the amount. Okay, bill has been duly met means Y made the account fully. So on December 4 he will receive, means for sending that bill to the bank also there will be an extra journal entry in Mr. X's book. Okay, that will be bills sent for collection account debit to bill receivable account. Now remember, for sending bill to bank for collection, only X's account, X's book will have extra journal entry, not in the book of Y. Okay, because Y he has nothing to do with sending bill to the bank for collection. Okay, so for sending bill to bank for collection, the journal entry will be bills sent for collection account debit to bill receivable account rupees 20,000. Now after sending, he got information that bill was duly met, that means he received money. So again on date 4 there will be a new journal entry, that is bank account debit for receiving amount of the bill. Okay, to bills sent for collection account debit 20,000. Now in the book of Y, on due date he met the bill, means he paid the required amount. So on December 4 he received a bill from bank and he paid money through his bank account. So bills payable account debit to bank account rupees 20,000. Now this is how you are supposed to pass journal entries when the bill is kept by the drawer and when he sends it to the bank for collection. Okay, only the thing that you have to keep in mind is that you have to pass one extra journal entry in the book of drawer. Okay, that is this journal entry, bill sent for collection account debit to bill receivable, and on the receipt of money on due date, bank account will be debited as usual, and instead of crediting bill receivable account, bills sent for collection account will be credited. Okay, and for payee, that is Mr. Y, all the transactions will be normal as we saw in the first use of bill. Okay, bills of exchange. Now let us see another illustration, that is illustration number 9. On 1st February 2019, A sold goods for 60,000 to B. That means there will be a transaction for sales also. Now let us see. See, in the question they said that we have to make entries in the book of A and B. That means we have only two parties here. So first we will see books of A, that is journal. So for selling goods on 1st February, there will be a transaction, that is B debit to sales account rupees 60,000, because A is the seller and B is the purchaser, so purchaser's account will be debited. In the similar manner, in book of B we will write purchaser's account debit to A rupees 60,000. Now let us see the detail. So on 1st February itself, A drew upon him 3 bills of exchange. Okay, now here in this question we are dealing with 3 different bills of exchange. Okay, let us see. First bill is worth rupees 10,000, that is payable after 30 days. That means due date will be after 30 days plus 3 days of grace. Then again second bill was for rupees 20,000, that is payable after 60 days. And the last bill of exchange is for rupees 30,000, that is payable after 90 days. Now see, the amounts are different, the maturity periods are different. Okay, so we have to calculate maturity dates for each of them individually. Now B accepted all the 3 bills. Now for accepting this bill there will be transaction, as we know in both A and B's book. Now let us see, since we have 3 different bills of 3 different values as well as 3 different maturity periods, so in the bill, in journals also we will be treating each bills as separate one. Okay, so for better understanding we gave them name like number 1, number 2 and number 3. You can write, or you can write bill receivable account number A, number B, number C. Okay, it's up to you. Now let us see, first bill was for rupees 10,000, so bill receivable account number 1 debit 10,000, bill receivable account number 2 debit 20,000, and the last one is bill receivable account number 3 30,000 to B, since B is the giver of all the 3 bills. Okay, his account will be credited 60,000. In a similar manner in the book of B there will be entry for 3 bills. A is the receiver of those acceptance, so bill payable account number 1, bill account 2, bills payable account number 2 and 3 as rupees 10,000, 20,000 and 30,000. Okay, now further let us see what are the information given. The first bill, that is bill number 1 of rupees 10,000, was retained by A till its maturity date. Now the first bill was kept by Mr. A till its maturity. Okay, then again second bill was endorsed to A. Endorsed by A to his creditor C. So second bill worth rupees 20,000, he gave it to creditor C. Okay, and the third bill was discounted by him immediately for 29,200. So, and last we know that all the bills were met by B on due date. So in the book of B, on the due date we will make journal entry. Okay, but for in the book of A there will be different journal transactions. Now let us see what are those transactions. Since A retained first bill till maturity date, there will be no transaction for this one as of now. Then second bill was endorsed to C. Okay, for that we have to pass journal entry. So February 1 itself, they haven't mentioned any date, so we are assuming that that endorsement took place on February 1st. So we will write C debit 2 bills receivable account number 2. Now in the question they said that second bill was endorsed, so we wrote number 2 within the bracket. Okay, and since C is the receiver of that endorsed bill, his account will be debited. So that second bill was worth rupees 20,000. Okay, then since they haven't told us to prepare journal for Mr. C, we are not going to pass any journal entry in books of C. Okay, then they said that the third bill was discounted by him immediately. Immediately means on the 1st February itself. Okay, he discounted it for 29,200. That means the actual value of that third bill was 30,000. Okay, but he got only 29,200. That means the remaining 800 is the discounting charges. So we don't have to calculate. Okay, you can just simply direct make entry here. Bank account debit, discounting charges account debit, 2 bills receivable account number 3. If you remember the journal entry for discounting the bill, it will be quite easy. Okay, so it's better if you try to by heart those transactions. Okay, so we know that bill receivable account number 3 was worth rupees 30,000. Then he actually received amount 29,200. The remaining 800 of difference is nothing but discounting charges. Okay, now for discounting, again we will not pass any entry in the book of B. Okay, Remember that. Then next, they said that all the bills were met by B on due dates. Now we have to see what are the due dates. Okay, first, now remember one thing, third bill case is over. Okay, we don't have to worry about third bill now anymore in case of A. Okay, so first let us start with bill number 1. Bill number 1 was worth rupees 10,000 and its maturity period was 30 days. So when we calculate 30 days from 1st February, it will be, since it is 2019, that means it is not a leap year, so we will have only 28 days in the month of February. Okay, so 28 days plus 2 days, since it is for 30 days, when we add 30 days to 1st February, we will get 2nd March. Okay, now add 3 days to that, 3 March, 4 March, 5 March, wait, now starting from 2nd February. Okay, now when we add 30 days to 1st February, what we will get, start counting from 2nd February. Okay, 2nd, 3rd, 4th, 5th, 6th, 7th, 8th, 9th, 10th February, 11th February. So 11th February is 10 days, then 21 February will be 20 days, then add 10 more days to 21 February, 22, 23, 24, 25, 26, 27, 28, 1, 2, 3. On 3rd March, we got 30 days. Okay, then add 3 days of grace, 4th March, 5th March, 6th March. So our first bill becomes payable on 6th March. Okay, so since he retained that bill till 6th March and he received amount from B on that date, so we will pass one journal entry on 6th March, bank account debit to bills receivable account number 1, rupees 10,000. Okay, then for payment of this 10,000 for bill number 1, again we will pass journal entry in the book of B, that is on March 6, bills payable account number 1 to bank account rupees 10,000. Okay, now for second bill, since they mentioned that second bill was endorsed to Mr. C and we don't know whether C got the money or not, so A doesn't have to do anything with receipt of this second bill's amount. Okay, so no need to make any entry in the book of A for second bill, but in the books of B we have to make entry for payment of that second bill. Okay, that second bill period was 60 days. Okay, when we already know that 30 days from 1st February is 3rd March, so add 30 more days to 3rd March. Okay, when we add 30 days to 3 March, start counting from 4th March, 5th, 6th, 7th, 8th, 9th, 10th, 11th, 12th, 13th 13th March, we have 40 days. Like that, after calculating you will get your, it will be quite easy if you do that in rough. Okay, so after adding 30 more days to 3rd March, we got 60 days on 2nd April. Okay, then add 3 days of grace, we got April 5th as our due date for second bill. So on 5th April, B made payment for that second bill. So for that we will pass journal entry as bills payable account number 2 to bank account rupees 20,000. Then for that last bill, since Mr. A already discounted it with the bank on 1st February, no need to make any journal entry in book of A on due date of that third bill. Okay, but there will be transaction in book of B because on maturity date he had to make payment. So when we calculate 90 days, okay, the third bill was for 90 days. So after 90 days from 1st February, it will be May 2nd. So add 3 more days of grace, so it will be 5th of May. On the 5th of May, he met third bill, that is bills payable account number 3 to bank account rupees 30,000. Now this is how you are supposed to treat different bills. It's not that it's not like that they will give only one bill in each question. Okay, sometimes they will give more than 3 bills or 4 bills like that, so you have to keep each individual bills in your mind while passing journal entries in both the parties. Okay, now this is another illustration, you can try it out. In here also, in this illustration they're talking about only one bill, but they have given different conditions. Okay, in Roman number 1 they said that if A retains the bill till the due date, it's similar with previous illustrations bill number 1. Okay, then second case is if he discounts it with his bankers for rupees 9,750, similar with bill number 3. Then if he endorses it to his creditor C in full settlement of his debt of rupees 10,200, means same as bill number 2 in previous illustration. And the fourth case is if he sends it to his bankers for collection. It will be very easy, you can just simply look into the illustration and you will be able to pass journal entries. Okay, so for this session we will wind up here. Thank you.